Ladies and gentlemen, boys and girls, listen up. We have a beautiful, beautiful topic we're going to be going over tonight. It is Kristjan Kullamägi. What you see in front of you now is a mock interview that a gentleman had with him. This guy's name is Billionaire. Apparently his name is Bill, but anyway, we appreciate him going through this. It says it's a 48-minute read. We're going to sum this up a little quicker because I've went through it. I'm just going to touch on the points. If you want to work through this on your own so you can get every and if, but in there, you should. I totally think that you should. We also have in our Discord resources the YouTube videos that he has where he shares his swing trading school. We also have my swing trading school, which you'll find is pretty similar to Kristjan Kullamägi's as well, only I also use William O'Neill's How to Make Money in Stocks in a lot of it, and we go through just a ton of setups as well. So without further ado, I will say this, we are in the Discord. If you want to join the Discord, it's absolutely free, just like all of my content, absolutely free. Join the Discord, look at the resource section, and go through everything. Everything. If you're new to trading, it's going to jumpstart you, and then you can be a part of this Discord meeting live every night at 9 o'clock, except for on Fridays and Saturdays. That's when we take a break. So if you guys hear any questions pop up or any other voices, that is part of the Discord crew, and let's jump into it. So this is Kristjan Kullamägi. The title says, I didn't ask for permission. Kristjan Kullamägi mock interview. So it goes on to talk about Kristjan Kullamägi right here in the beginning. He talks about exactly where he came from. So he talks about the 2020 being more than just an outlier. He actually, 10 million new trading accounts were opened in 2020. So if you guys weren't aware of that, that's the COVID, right? That's why he said he made a lot of his returns was in 2020 because there was a lot of dumb money out there just blowing up their accounts, right? What makes him more rare is he's the only person to my knowledge who has achieved the financial goals with also sharing hundreds of hours of live trading and teaching for free. So that's the Kristjan Kullamägi Trading School that we have referenced in our Discord's resource page. You'll be able to find that. You also can find it on YouTube. And if you're watching this on YouTube, go watch his right after this because then it'll link him and I together. And I would love to ride the coattails of this awesome, amazing millionaire trader, okay? I think he's probably in the 50s or $60 million in 5 or 6 years now. So he's doing awesome. So let's see here. Oh, and that's another crazy thing they point out here is some of his videos, they don't have a lot of views. Like a lot of people don't watch this. And I don't know what it is. Like people just don't want to get better, or maybe trading's not that popular, or maybe people just don't understand that that's such an amazing resource. All right, so how big are your trading accounts? Well, it looks like here it says as of March 1st, 2021, he's up to 82 million. Okay, so now we're 3 years later. Guarantee he's probably, by the looks of it, he's probably close to doubled that. Okay, so he's right up there. So here's part of his journey. His initial capital was 5,000. He lost 90% of it in the first 2 months. He blew up his account. Okay, he saved up some more money. Started again with 3,000 or 4,000. He blew up that account. And if you guys don't know what blowing up an account is, it means that account's gone. It literally is toast. If you got 4,000, you're down to a couple $100, you've blown up that account, okay? So then he took a loan, which I'd never recommend, but this gentleman did it. He took a loan, started back up again, and he blew up again. So 3 times he blew up. Then he took another loan, and he went sideways for a whole year. What does he mean by sideways? It means he was trading and selling. He was winning some, losing some. You know, he wasn't making any money, but he also wasn't losing any money. So he went sideways for a year. It says, came close to blowing up a couple of times the second year. I was going sideways, but I had some big swings in there too. And he said, right now, let's just say I don't need to trade anymore. May 2013, I was down 9,100 in my trading account. My account was tiny, but you can see it growing every month. January 2018, I had 1.4 million. I hit 4 million in July 2019, and I had close to a 1 million drawdown, mainly because I overstayed on a bunch of stuffs like ENPH and Roku. November 1st, 2019, I was in a low to mid 3 million. This is how you grow your account, at least 100% per year. As of March 1st, 2021, my account was $82 million. Now, he goes on to talk about where he got most of his money, and that was in 2020. He said it's a big anomaly, and it was, because everybody was getting free money. We were sitting on our butts. We weren't doing anything, and people just, what do they want to do with their money? They either want to spend it or make more money with it, right? If you're any type of gambler, that's what they did. They're like, oh, well, I'll just put it, and that was before, we had any online gambling with sports and stuff. I think the sports online gambling came shortly after 2020. I think that was 2021, 2022. Maybe even more recent, 2023, before it actually started getting in your pockets, into your cell phones and stuff. So people were betting in the market. And he said it was just literally free money, and it really was. I knew a lot of people talking to people in jiu-jitsu and stuff. They would say, oh, I made so much money in 2020. And they feel like they're geniuses. It's like anybody, you bought anything and held anything. It was so forgiving. Everything went up. But it was the people that were able to hold on to it in 2021 through 2023 were the real traders, the people that knew when to get out and understood the market analysis. Okay, and we'll go over that. We'll elaborate that on very, very soon. So he wants to talk on here. Now remember when he's talking, okay, he's talking about GME. Let's see, when was the date here? March 1st, 2021. So he's talking about GME right now in 2021. Guys like me are rich because people overestimate their abilities on something like GME, GameStop. A quarter of all the money I made in trading over 10 years came in 1 month span on 2 trades on GME, because millions of people came together and decided they were going to be overly confident in a group. I figured maybe I should be underconfident as much as possible, because that seems to be where the money is. So what he's saying is a ton of people came together, a ton of people were overly confident that this thing was going to the moon, right? Well, he said, well, if everybody's so confident, I'm going to get in too, but I'm not going to be overly confident. I'm just going to get it while it's hot. And he got in, he had his lunch, and he got on out, right? Dine and dash, baby. Will, no offense, I'll never do that to you. You very often talk about listening to a stock. Elaborate. Okay, so this is where he goes on about you have to listen to the market. Okay, you'll have people always giving you advice. Okay, strong opinions held loosely. And I go about that all the time. You're going to hear news. You're going to hear people talking about debt. You're going to people talking about every little thing that's out there. Okay, the issue is people aren't listening to the market. They're listening to the news or their friend or their grandma. If you just use the simple technical analysis, you'll understand what's going on in the market. And guys, that's why I use this S&P 500 here. That's why I say, and I had a discussion, I won't say his name. I just had a discussion the other day. Like, you can look at all your trades. If they're not working out, they're not working out. You need to back off, right? But you need to stay attentive, vigilant, and focused as long as this market is staying above a 21-day moving average. Okay? We can look all the way back here. When I'm trading, it's because we're above a 21-day moving average. When I'm not trading, it's when we're below a 21-day moving average. Okay? And I will play that whipsaw, because the second we get above a 21 and we start riding a bull market, we're pretty safe. This is when we want to play. I mean, the last time we were on the biggest bull run before we had that bloody day 6 sell-off, we stayed above the 10-day moving average and we rode the 10-day. The only time we had pullbacks, we bounced off the 21-day moving average. So once we get going, people, we get going, and we have been going for 2 years now. I called the October lows about 3 months after the October lows, but I called them. I said, we're on a new bull run. I was talking about, actually, I actually have it recorded. That's what's great about YouTube. I actually have it, a YouTube short. You can go back January, February, I think it was somewhere in this area. So November, or yeah, I think it was November, somewhere around here. I was actually, nope, I'm sorry. We got to go back further. So yeah, March. Yeah, because here was the October lows right here. In March, I recorded it. It's on a YouTube short because I was listening to the market. We have new lower highs. We were breaking up above a 200-day moving average, and then we started breaking above this 21-day moving average, and we started to hold. So I call this market, and that's just listening to the market. And that's what Kristjan Kullamägi is trying to get across here in this. You know, your best friend is a stop loss. Just follow the price action. You don't know shit. Your opinions are useless. Strong options held loosely. You have to be fluid. I can be super bullish one day and super bearish the next because I listen to the market. And you guys will hear me say it. You know, just right here. I said right here when we broke the 21-day moving average that I'm not feeling comfortable about this. I'm hands off. And we broke down even further. But once we got back up above, I was ready to go again. Let's go. We're above a 21. You know, and that's what he's trying to tell you here. You have to be. People think, you know, oh, I'm bearish. Well, they think that that is your opinion about the market for the rest of your life. You have to understand to be malleable, be water, okay? You need to be malleable. You need to be like a tree in the wind. You can sway back and forth. Let the market tell you what you want or what you need to hear. He also says, I don't listen to the media. I don't listen to Kramer. The only thing I listen to is the market. That's the only thing that pays listening to. Sometimes the market lies to you because he or she is an asshole, but that's the cost of doing business. You need to listen to the market, not the analysis. They are wage slaves. There can be a whack-a-mole market. Decent breakouts are not working. Not a good sign. You have to listen to the market. The strong things can really stand out when the market is down. Not that it matters then, because I don't think these stocks are ready to make a big move, but you have to pay attention. What do I tell you guys every time there's a market pullback? What is holding up the best? What is relatively strong in the market? That's what he's trying to tell you here. That doesn't mean get into it because it's holding up better while the market's coming down. No, that means when the market starts to turn around and the market starts telling you it might be time to get back in, that's when we're looking for our plays to get in, okay? Next, he talks about what's your view on jumping around from one setup to setup. I think this is beautiful. I love the way he says this. He basically says, you know, when you're a new trader, you kind of have to jump around. Okay, you have to jump around from one stock to another to figure out what you want to do, okay? Now here in this Discord, we focus on 3 setups, 3 timeless setups, okay? The trend breakout, the base breakout, and the episodic pivot. Those are all in the resource section and in the swing trading school in the YouTube section, okay? We focus on those 3, and they are all swing trading setups. Now, you might be a better scalper. You might be a better futures trader or a better options trader, or you might be a better range trader. You might be a better VWAP trader. You know, there's so many different types of trading, but the main ones are the long-term investing, the swing trading that we do, and then the short-term daily day trader. We focus on swing trading because that's who all the best people trade. Okay, William O'Neill, Kel Oliver, Kristjan Kullamägi. I mean, the list goes on, guys. I don't need to sit here and just ramble on names. But okay, so he goes on to saying that you can jump around in the beginning, but then you need to stick with one thing. After jumping around for a while, figure out what's bestly in tune with your psychology. What makes you happy when you're trading? What works best with your timeline? So if you're working all the time and you don't have too much time to do this studying, day trading is not going to work for you because you have to watch the market attentively from sunup till sundown, okay? As to where this swing trading, you find your setup, your alert goes off, you see if the volume's coming in, you take it or you leave it as long as you've done your studying the night before to see where the market's at, okay? He goes on to saying he used to day trade, but now he only swings. So he talks about, I started off small, then you scale up. No need to get stuck in that stupid day trading thing for the rest of your life. It's just a personality thing. If you like action and you want to feel like you're doing something all the time, great. He says, I just fucking hate day trading. I'm not bashing successful day traders. Swing trading is harder in that way that you have to have the ability to wait for the weeks on end. Day trading is really tiring. I hate it. Sometimes I do it if I see something really good, but mostly it just takes up a lot of time. He goes on to do bashing day trading, but then he goes into saying, you know, if you're day trading, your win rate should be over 50%, and your risk reward smaller, like 2 or 3 times your risk. And it's hard to get 10 times your risk day trading, okay? But in swing trading, that's what I'm aiming for every trade is 5 to 10x risk. So if you're risking $10 on a trade, he's expecting to get $100 on that trade, okay? That's huge. That's a huge thing, okay? Let me grab a drink. Any questions so far? You guys are all geniuses. But his win rate is very low, okay? He only has a 30% win rate. And you might ask yourself, well, how do you have such a low win rate, but he still makes so much money? That's where the risk reward comes in, okay? Now, if he's only winning 30% of the time, you better believe his wins are way bigger than his losses. You can have, you know, $10 losses and have one trade that is $100 and you make up for it. Okay, so if you have 30% of your wins are $100 and the rest of your wins are $10 losses, you've more than made up for it. You've actually made $200 over the course of the losing that $100. I hope that makes sense. I mean, I hope it did make sense, to be quite honest. So let's see. It says, if you are swing trading, you should probably at least have a 1 to 5 risk-reward ratio. Meaning if you're going to take a trade, you should expect to stop out at 1R. You should be actually making at least 5 times what your risk is, okay? So 1 to 5. He also says here, because in swing trading, position trading is much easier to buy stuff because momentum on the long side works differently, and also mathematically, I've had stocks that go up 50 to 100% all the time, but you rarely short a stock that goes down 50% of the time. So he's talking about taking the momentum to the long side rather than shorting, okay? Now we're going to go into he talks about these flags. So the flag pattern or the trend breakout. I call them trend breakouts. They're flag or pennants or bullish pennants. There's a million different names for the same damn setup. So many people have been using these, okay? Pradeep, Dan Zanger, again, William O'Neill, Kristjan Kullamägi. They all call them something different, okay? But I call them trend breakouts because it's trending. After a big move up, it pulls back. It makes new higher lows, and it makes new lower highs, or sometimes a base at the bottom. And then it breaks out. It's a big triangle. And you can see that right here. This is a trend breakout right here. Okay? Big move up, a pullback, it creates this trend, and then it gets really, really tight here and it breaks out. And we are actually going to go over this trade here in just a little bit because he brings it up in this. So it says, talk about flags. How do you have an edge? Give a flag example. He said, everything looks like a flag if you look closely enough. We are looking for very specific setups that give us an edge. We want an edge, not randomness. You are your own worst enemy. You need to get rid of the randomness out of trading. You need to trade with an edge. Put in some effort, invest in yourself, and then you don't have to trade random stocks. You can trade with an edge. I'm always looking for tightening up action, relative strength, higher lows, and want the odds on my side. I don't want random things in my portfolio. It's very hard to explain what looks good versus what looks random. It takes a long time, but don't worry about it. Try to improve and look at the charts. Look at 1,000 examples. Go through every stock and look at high, tight flags. You will see the best setups. The one that makes the biggest moves are just very clean in the way they act. It's hard to explain. It takes time. It takes many years to get good at this. You can get profitable much faster. And guys, I want to stop and elaborate on this. That is why we go and have these Discord meetings, because we are trying to train our eye to see these flag setups. That's why I go through 300 stocks every damn weekend. I go through 300 new stocks, not to mention the 80 to 100 stocks that I'm looking at to keep a close eye on. That's why I go through so much so I can bring you those best. And Awesome Art brought it up today. She said, you know, the watch lists are helping her so much. Multiple people are saying this because now we know what to focus on. Now we know what the highest relative strength stocks are. We know what's in a trend that might break out, and we're looking for that volume. So we can focus our intent on very specific setups because there are so many stocks out there, guys. There's an ungodly amount of stocks. So if you just pay attention, we bring them to you to train your eye. So instead of looking at all the garbage that's out there, now I still want you to look at the garbage out there. I still want you to flip through the stocks, figure out what you like, and then watch them every day. Flip through them, watch them, because you're still training your eye. You're learning and understanding how stocks move. If you don't do that, then you're just buying blindly. We don't want you to buy blindly, and I don't want you to just follow me into the pits of hell while I'm trading, because it's not going to make you a good trader. You know, if I just give you guys, you know, stock tickers and tell you when I'm buying and when I'm selling, that's not the longevity of your trading ability. If I die, or if I quit, or if I blow up, that it's not going to help you at all, you know. So make sure you're doing your homework as well. But that's a good reason why to be here for the watch list, because it helps you train your eye on what to look for when you are looking for them yourselves. And then we also give you 300 stocks that are relatively strong every Sunday, so that way you can go through it. Actually, I think Adam puts that out on Friday or Saturday, I can't remember. But he puts that out there so that way you have the ability to go through the relative strength stocks, and you don't have to go through 8,000 stocks. You can just go through 300 stocks, okay? Now it says here, you can get profitable much faster, but to get really good at it, it takes years. But if you're really focused on the things that work and put in a lot of effort, you can be profitable from the start, especially if you start out in a good market. Right now, we are in a good market. The cleaner the chart, the better. You have to train your eyes. I've been doing this for 8 years, looking at maybe 1,000 charts a day. You have to train your eyes and get a feel for what's clean and what's choppy. You don't have to be super advanced in your analysis. The simpler, the better. You will outperform 99% of the experts. Focus on the stock that have great charts and great earnings, or any kind of earnings. To make money in the market, you need to have some kind of an edge. Not some random stock that maybe goes higher. Maybe it has, make a habit of drawing these triangles. If you can't draw a triangle, this setup is shit. If there isn't a range and at higher lows that is set up, it's shit. It's as easy as that. Move on. So what he's saying is, if you can't draw a clean setup, if you can't draw a clean trend line, and you're trying to make it work by fiddling with that trend line, then the setup is shit, okay? You don't want to mess with that. Let's keep it simple, stupid. KISS, keep it simple, stupid. That's what he's trying to go on for. If you need a barcoder reader, it's not a good setup, okay? And then this is where he goes into LEDS on May 2021. That's a great setup. This is a picture perfect setup. This is your role model breakout. So right here it is, guys. Take a look at my screen. This is what Kristjan Kullamägi himself says is a role model setup. Now, if we zoom out, we can see in hindsight, this thing went all the way up here to $31.45 after breaking out at $8.20. Now, nobody knew at the time that it was going to go that high, but I can tell you this. If you were just to look at this setup, okay, there was 2 setups on this. There was right here on this daily where we had a big push up on volume, a pullback, an even bigger push up on volume, and then it pulled back and created these new higher lows. What are new higher lows? Well, we're not looking at any of this because we haven't played this yet. But if we just look at this, here is a high, here's a new higher low, meaning this is a high, but it's lower than this one. So here is a high, a new higher low, a new higher low, a new higher low, and a new higher low. Now, if you guys notice, look at these candlesticks. We have the very, very large candlestick, okay? This candlestick is ranging from, let's see, it is 154%. Is that right? 154%. Uh-oh, Control Z. There we go. Now I got to go back and find it. There we go. Zoom back in. All right, so we have this set up here, okay? Oh, I did it again. Oh my gosh. Oh, well, somebody's gonna fire me. Dan Bob, don't fire me, Dan Bob. I was trying to use the hotkeys, but they must have got switched up on me. All right, so we got a huge volume candle here, or not volume. We have huge volume, but we have a huge candle here. If you look at the next two, this next new lower high, it's smaller than this one, okay? So it's getting tighter. Then these get a little tighter. We get another pop up here, bigger candle. Now look at how tight these are getting. Very, very tight. Much, much smaller That means the range is getting very tight. And look, it's following this 10-day moving average, okay? You don't have to, it doesn't need to be like squeaky tight. We just need it to follow it, okay? So it's following the 10-day moving average, and if you guys look here, look how tight this is getting. All eyes are on LEDS if you're a momentum trader, right here. And look, 1, 2, now it breaks out, and guess what? It's on volume. Breaks out on volume. Now, if this breaks out on volume here, we're going to use the previous day low as our stop out. So if I just go ahead and mark this stop out, I think Control H, I'm trying to get better at this, Alt T. Let's see if I do this right. We're just going to do this. So we take this as our stop loss right here, this yellow line, and we enter this stock. Everybody's different. I like to take it on volume. Danny, our boy Danny, likes to take it right here at the high of the previous day. So this is going to be your buy-in right here, and this is going to be your stop loss right here, okay? This is the trend break strategy. This is as clean as it gets. Big push up on volume, pull back, gets tighter and tighter, and let's take a look at what happens, guys. Look at this. Now, we're using the 10-day moving average. We've already exited out a lot of our position here. Let's say half, okay? We've exited half of our position out here using this. So at 2R, so about right here at 1030. And we're going to let the rest ride now. We're going to let the last 50% of our shares ride until it breaks a 10-day moving average. Look at this thing. It goes all the way up to 32. I'm sure some of us would have exited a few more shares out of here, but if you would have exited out at the 10-day, it would have closed here, and you would have exited at least out at $17.99 or $18. That's humongous. That's a $10 gain. $10 per however many damn shares you have. So if you took 1,000 shares, and you were risking, let's see, that would have been 20, 30, 20, about 50 cents. So that would have been a $500. You could have made $10,000, okay? So you can do that multiple however you want. $250, you would have made $5,000, all right? So you figure out the multiple, whatever sounds like a sizable amount to you, but that was crazy. That's a crazy move right there, okay? And then look, it just falls right back down, and that's why we have stop losses. After it breaks this 10-day moving average, we're out of this trade. And look we have nothing else to worry about. It's gone. It's dead. It's done. Let's look where it's trading at today. Look at this. It's still heading lower. That's why we don't mess with these people. We get in on the game time, right? On our strategy, and then we get out when it's time to be done. And then we don't mess with it anymore until it sets up again.
I have a quick question before you move on.
Yeah, please.
So Awesome Art asked the other day, Danny mentioned it needs another inside day.
Mm-hmm.
Can you show what an inside day is there?
Yeah, actually, I went over this with her a little bit today, but I think it's important for everybody to know. So an inside day, so if you see the bottom of this wick and the top of this wick, that is one full candle, okay? If this next piece trades within that candle, means it opens and closes within the previous candle, that's an inside day, okay? And it doesn't have to be perfect. We don't need it to be very perfect, okay? But this is within this candle. This is close enough to be considered an inside day. It did kind of drop down a little bit, but this is a true inside day. This is close enough. This is a true inside day. I would consider this at least 4 inside days, maybe even 5, okay? Because they are all within the same candle, okay? And we could even Google that too. What is an inside day? We'll give you the true definition, okay? What is an inside day in trading? So that way we have the true definition. Trading an inside day is a price pattern that occurs when the high and the low of a security price on any given day are within the high and the low of the previous day. Okay, and it even shows you. It gives you a cool little picture here. Same way. So it's the close. Okay, so as long as it closed within that area, you could consider that an inside day. So this closed below this, or I'm sorry, it closed within this candle's range. This closed within this candle's range. See how that was just squeaked in there. This closed within this candle's range. This closed just peeping in there inside this candle's range. So these are 5 inside days. Okay, 5 inside days. That got really, really tight, guys. Really, really tight. So when Danny says, I want to see another inside day, that's what he means. He wants to see another tight day, another inside day. And that's exactly what LED did here, So it's looking good. It's looking really, really good. Does that answer your question, Dan Bob and Awesome Art? I always like to give the true definition too, because good. I like using the true definition because even if so you guys have to understand when you're trading, or just like I do jujitsu, I might call it a scissor sweep, but somebody might call it a pendulum, or not a pendulum. They might call it like a toss sweep. There's 8 different sayings for the same choke. Cross collar choke, you can call it 8 different things, and when it comes to trading, what I call is a high tight flag. Somebody might call it a bullish pennant or a croissant. I don't care what you call it as long as you understand it. So I call those inside days. You might call them something else, but it's always good to look up the true definition, and so we really understand what the true definition of it is. So, all right, let's continue on here. So LEDS May 2021, that's a great setup. This is a picture perfect setup. This is your role model breakout. Study something like this. Make a huge move on big volume, then triples, pulls back, finds support on the 10 and 20 day, goes sideways and tightens up, and then breaks out on volume again from this tight range. First base breakout. You don't need to trade 10 different tickers a day. Find the superstar ones, and that's all you need. This is a superstar one model 1. This is what you need to try and find. Pattern recognition varies from person to person. It is very subjective. It is not exact science. It's kind of hard to explain what I see. I have a huge database of charts in Evernote, literally tens of thousands of charts. So I do the same thing. I have a bunch of charts that I have stored here on my on this here. Like I could go to my pictures, my camera roll. I have a VWAP examples that we could go through. Important pictures that show different pattern recognitions. I have a buddy of mine who is showing me a few of his charts. I save all of his charts to study them, and then I got plenty of other charts. It's just it's an overwhelming amount, especially with some of the people that I've worked with. They have huge databases for so many different types of strategies, and to gain a good strategy, you need to definitely take all that into account. Take screenshots so you know what you were thinking of last week. And mark up the chart. Even if you're just trading, mark the chart, look where your marks are, come back a week later or come back the next day, and you'll find out really soon that you were either right or you were wrong. If you find out that you're more right, then you need to start taking these setups, right? If you find out that you were wrong, well, I've a saying that I've always said, you're a loser unless you're learning. So learn why you were wrong. Was the market not in the right state? Was there no volume there? Really figure it out. And so that's why it's really nice to have those technical analysis books, All right. Let me take a sip here. All right. This is where he talks more about the right stocks and stock selection. You guys are it's going to sound pretty familiar to you, okay? You want to find stocks that are expected to grow 20, 30, 50, not 3%. There's nothing there there is nothing there for me personally. You want to find the most explosive stocks. You want to find stocks that have the potential for 10% moves, or do you want to have stocks that have potential for 50% moves? That's what you need to ask yourself. And if you ask yourself you prefer the stocks that make 10% moves, please leave. He's not shyful. He's not shy at all. He's like, just get the hell out of here if you're just only trying to make 10% on your money. He's trying to make the big kahuna money. He wants that big boy money. So he goes, I don't want to see anything below a 5 ADR. If you don't know what ADR is, I say this all the time. ADR is average daily range. So if you look at this and you look at an average daily range, this is an ETF, S&P 500. Today, the average daily range you can see is down here. It only moves 0.8%, not even 1%, 0.8%. And if we measure its move today, you can see it moved 0.92%. So a little bit more than its average daily range. Now, if we look at something like FSLR, you can see this is a stock that moves 6.3% in one day on average. And if you look, today's move moved 6.7 or 6.8%. Why did I take this trade? Look at the trend breakout. Look at the active trader. Look at this. I took 10 shares. I started with 100. We're down to 10 shares. We're up $127 on this portion of that trade. What am I going to do with this trade? I'm going to let it ride. It moves 6.3% a day. I'm going to let this continue. Look at Abercrombie & Fitch, ANF. You can see right here is the trend break, right here. Beautiful trend break. I got into this trade. I took 100 shares. I sold 25 after 2R. Look at, I'm going to let it play. Why? This thing moves 4.9%, almost at 5%. Okay? This is a leader in the market. That's why we're taking these higher ADR stocks. You need to make sure you are focused on these higher ADR stocks, okay? Am I missing anything in the chat? Okay, I see that. Let me just double check the chat really quick, guys. I want to make sure. I hear a lot going on. Oh, Stevie R just joined. Dan Bob, could you direct Stevie R to make sure he knows to join this so I don't have to waste any more precious sweet time? So remember, the average daily range, it means it moves on average a range of 5%. Anything lower than that, it's too slow. You're going to get your money in and you're going to watch paint dry. You want to make money? Get into the faster mover stocks, okay? So if you ever give me a ticker, that's the first thing I look at. First, is it above a 200-day moving average? Is it setting up? Why am I looking at this? It's below 5 ADR, okay? There's a couple of stocks out there that look really, really tight that I might take, that I have taken. I took one today and I kind of felt shitty for doing it because then I'm losing my purchasing power by wasting my money on slower moving stocks. I don't like that. I want fast moving stocks. And this is what Kristjan Kullamägi tries to put in your head. Only people with over a $10 million account can trade below that. For everyone else, it's a waste of time. High ADR, 5+, that's a minimum cutoff. If you want to waste your time on low ADR stocks, please don't share it with us. It's a waste of time. So he goes on to talking about how important that is. How important it is to do that. Steve R., I see that you found us and just joined the Discord. Welcome, brother. Welcome to the channel, man. It's good to see you in here. We're going over Kristjan Kullamägi's setups. And if you have any questions while I'm reading this, you're more than welcome to ask. Don't be shy. So he also goes on to talk about things like Doge that have an explosive mood, don't need a monthly flag. It went up 1,000%. 1,000% in 2 days, and flag was 5 sessions. That's more than enough. So he's saying in a 5 days, it created a flag, and it went up 1,000%. That's awesome. We could take a quick second out, see if I can find it. I actually hold this on TraderView. If you guys ever want TraderView, you can download. I got a link in the Discord here. All right. You can click on it. It's your first week's free if you use my link here. I'll just show it to you in the Discord. So if you bring up the Discord and you go to this resource page right here, there's plenty of stuff you guys can look at. But if you scroll up here, you can click on TraderView right here. That's the platform I use to show you guys all these examples. If you use that, you'll get your first week free using my link. The first week is free no matter what, guys. You can use the free version, but if you want to pay for the essentials so you can see things like Dogecoin on there, and it gives you more scanners, it gives you a bunch of other stuff, it's real cheap. But if you want to use that, use my link. Other than that, there is a free version. There's never pressure. You never ever have to pay. Everything's free in this Discord, okay? I always give you the free version, but if you want more like I did, I want to at least give you your first week for free. I think it's only like $15 a month, so it's pretty cheap. But use my link. So here's Dogecoin, and this is what he's talking about. This is what he's talking about right here. I think this is the 5 sessions he was talking about. Looks like a little bit more than 5 sessions. Looks more 10 sessions. But you can see it went up like this and traded sideways and then ripped up higher. So it looked really, really good. It was really nice to see that. All right. And, you know, there's plenty. Thank you, Dan Bob, for putting that in the chat for us. Thank you very much, brother. I guess I should have just asked you to do that earlier. And then, you know, this is another setup here. Huge move up on volume. It pulled back. It traded sideways. And then, boom, explosive base breakout, trend breakout right here. Boom, explosive. Okay, so that's just another thing that he's talking about. You don't need a multi-month flag. It went up 1,000%. In 2 days, a flag was 5 sessions. That's more than enough. Explosive instruments are not going to wait around. All right. So not rocket science. You just need to spend a few hundred hours identifying what is a good setup. And that's what we do every single day. We're focused on the best setups. Adam and I scurry through so many stocks to bring you those best setups, so you're in the right place. Focus on the daily chart, 1 month and 3 month and 6 month momentum. The strongest stocks across those 3 time frames, the strongest stocks elite. The bigger the first leg higher, the bigger the second leg higher is going to be. So let's say the first leg is 50%, and then it goes sideways and flags all the usual stuff. I mean, the second leg higher could easily be another 50%. But what if you are trading a slow-moving stock and the first leg is only 10%? The second leg will probably only be 50%, if you understand what I mean. So he's just saying the bigger the move, the bigger the move. The smaller the move, the smaller the move. That's why you're going for the bigger, stronger, faster stocks. That reminds me of a song, by the way. All right, so we get it. We get it, right? We know we got to stick with the fastest moving stocks, right? I hope everybody's understanding that. It's very, very important to stick with those fast moving stocks, okay? So let's go ahead and scroll through some of this. So now he goes on to talk about technical or fundamental, okay? If you don't know what technical analysis is, it's what we do. When we draw those trend lines, we find that price action, and then we take our plays on the volume breaking through those trends. That's technical analysis. When I use those moving averages, like in the S&P 500, to figure out where we are at on a time frame. So if we look at the S&P 500, the SPY, these moving averages, this is technical analysis. It's me using the chart and some data to help tell me where we're at, okay? So I use stage analysis, Stan Weinstein stage analysis, as well as my own thoughts on the S&P 500 just from my own visual perspective, okay? That's technical analysis. These lines, this line right here, technical analysis. It's showing me the all-time highs, the previous all-time highs. And as you can see, we broke up through all-time highs. We came back, we retested, we went higher, we broke through, bounced right back up and headed higher. Now look, we bounced off a 10-day moving average today. We're up to brand new all-time highs at 537,000. It's just a beautiful thing, technical analysis. He says and fundamental analysis is digging deeper, and we'll go into fundamentals very, very soon. There is some fundamental analysis that we do look at, but we keep it super, super simple, guys. Okay, you want to see, big earnings. You want to see big earnings growth, big sales, and anything over 100%. It's that simple. If you're seeing huge earning growth and huge sales, you're going to see. Tran, you got anything, bud? So he's going on to say technical analysis or fundamental. Technical analysis works. What can I say? I think technical analysis works. Combining technical analysis with fundamentals is just a winning recipe, in my opinion. Guys make tens of millions or even hundreds of millions. You don't need to know any fundamentals. If you could figure out where the money is flowing, you don't need to know any fundamentals. Fundamentals are just to give you a little more conviction. If you are good at stock selection and can figure out where money is flowing, or you can catch a bunch of fundamentals and be a complete useless piece of shit, be totally unable to extract money from the markets. I would say I'm a little bit in between. I'm between a useless piece of shit and someone who can extract money from the markets. The macro stuff, yeah, I'm too lazy to do that. Deflation concerns, well, my concern will be that the breadth has been incredibly bad and the major indexes are kind of due for a pullback. Those are my concerns. I don't give a shit about the macro. I care about the technicals. That's what pays. And you guys will know we talk about all that all the time. We look at the breadth of the market using RSP. The S&P 500 might look good, but we want to know, is the rest of the market looking good? Because if not everything is moving, then we might have some issues. And that's why we do that every single day. We go over everything, the breadth of the market, the S&P 500, but we don't go, oh, well, the election's coming up, and if so-and-so gets into office, then trade is going to go up and this and that, and bonds will rise because of this situation. We don't look at the macro. Macro's not going to pay you tomorrow. Macro is going to pay you 10 years from now. That's a long-term investment strategy. That's not what we're doing. We're trying to make money now, okay? So macro is not going to pay the bills. Technicals will. In the past, there was a lot of volatility in Brazil with all the political drama and shit like that, but I don't care about any of that. I care about price action. Macro is irrelevant. GDP and inflation, it just charts and earnings. If the macro is good and the charts are shit, you won't make money. And if the macro is shit and the charts are good, who cares if the macro is shit? You are going to make money. Unless you are running 100 million, you probably shouldn't care about macro at all. There can be all the bad news of recession and trade wars and everything going to hell, but you know the chart can look like a bull flag. Fundamentals can help with conviction, like I know a company is a leader in its own market share, or if it has a niche and it has big earnings and revenue growth, that gives me conviction to pair it with strong charts, definitely. Instead of trading a stock that will likely go bankrupt, I am really just betting on a dead cat bounce, so I don't have conviction in it fundamentally. So yeah, if I had to choose something, I would just trade off a strong chart no matter what. But I do have a little bit of knowledge that gives me an edge. That's why I track earnings and stuff like that, okay? He also goes on to talk about the risk management, if you understand risk management, because he goes on to saying trading is an imagination game. The one with the biggest imagination wins, assuming risk management and all that stuff. So he knows risk management. Risk management is first and foremost. You guys have to understand that. So before you guys even start trading, if you don't understand risk management, you need to go through some of my videos. Okay? Risk management is absolutely pinnacle for being able to trade another day. If you guys don't know what that means you will blow up your account if you don't understand risk management. And Kristjan Kullamägi goes on to saying in a previous interview, when he first started those first 3 accounts, he blew up because he didn't understand risk management. He did not have any risk management. He was just buying as much as he could and holding for as long as he could. That was his risk management. But now that he has risk management, he has tens of millions, 81 million at this time. He's probably got hundreds of millions now, okay? So let's see. Talk about market conditions and what's in a bad market condition. So we went over a little bit about market conditions. He goes kind of into the past market conditions and how everything works out. But this is the main part that I really wanted you guys to get an understanding. You don't buy breakouts when the 10 and 20-day moving averages are down trending. So he uses the NASDAQ, okay? I use the S&P 500. So I want to touch on that a little bit. Here is the 10 and 21-day moving average, okay? He does not take these trades if it's on a downtrend. Here's the 10 and the 21. The white line's the 10, the 21 is the red, okay? These are downtrending here. He is not trading this market, okay? I would have already been out of this market because I'm a little bit more skittish. So if we break through the 21, I'm already out. He's saying right here he's going to be out, which is, it's fine. Everybody has their own niche. Everybody has their own, what they like to do. Me, I'm out until we make usually a new high, or at least we make a new, a new area that it's holding, right? This here, I was out. I was hanging out because nothing was working, and we had a huge sell-off. And the 10 and 21 are downtrending, right? They start to uptrend here. Well, sure enough, when we started to get that uptrend, we also got that bounce off that psychological $500 area, okay? So when that happened, I was back in, we were ready to rock, and good to go, So, hang on, guys, having a little technical there we go. Let me just mute. There we go. All right. So 10 and 21 day, you can see as it comes down, boom, we're out, right? 10 and 21 start to curl up. He's back in it to win it, baby, okay? So that's just what we're looking at here. You don't buy breakouts when the 10 and 21 day are trending down. On the NASDAQ. This simple rule will keep you out of bad markets and in good markets. So that, and if you guys want to, you're more than welcome to read this. I put this in the general chat. It's very important that you understand this. You need to understand this stuff, guys. If you don't understand this, there's no point in taking this trade that I took on ANF or AMRX. Let's look at AMRX. I only took this because we were in a good market. Okay? Look at this. This is a base breakout right here. I'll mark it for you. Right. Now this is where I took it, right where that green line is, right at the base breakout. Why? Well, I wouldn't have taken this trade unless we were in a good market. So let's look at the S&P 500. When I took this trade, the market was above a rising 10-day moving average, above a rising 21-day moving average. It also bounced off this 10-day moving average and started heading higher. Of course, I'm going to look at the overall market before I take that trade. That's exactly what you have to do too. So know where you guys are at when you're taking these. It says you don't want to buy breakouts in a downtrending market, period. Buying one stock that looks good and is breaking out is a fool's game. So every time we have a pullback, instead of saying, well, I have to trade, I'm a trader, oh, I need a swing trade. No, these are the times where you're watching, you're scouring the market, and you're finding all the stocks that are holding up the best during this pullback. So when we do start trending up, you can look at those same stocks that were holding up so well. What do you think is going to happen if the market pulls back and these stocks aren't pulling back as hard? Well, when the market goes up, these same stocks, the RS stocks that I constantly talk to you guys about, are going to go skyrocket. Okay? They're going to head much, much higher, much faster when the market decides it's time for it to go up. Okay? So that's why we preach this stuff. So what is your view on the market? We don't need to go over all this. Do markets change? He says it is the same thing over and over again, just the stocks and actors change. And when I say actors, like right now, it is the Wall Street bets and Reddit people. And in 10 years, it will be another crowd. 10 years ago, it was another crowd, but it's different stocks doing the same thing, behavioral patterns, and the same, everyone thinks they are in a unique, but they aren't. It's the same thing over and over again, just the players change. Don't be a victim, educate yourself. Anytime you lose money on anything, it's your fault, no one else's. And I want to point that out, guys. I hear all the time stock traders going, oh, the market makers, they swipe me. Oh, they're stop hunting. Oh, this is a scam. None of it's a scam. It's a game, and you need to learn how to play it, okay? If somebody dunks on you, right, you're not going to say, oh, well, my sneakers weren't tied. No, you got dunked on, and you feel like shit because of it, right? And I don't even play basketball, so I shouldn't use that analogy, but, you know, stuff takes practice, guys. There's going to be false breakouts. You should know what a false breakout is. If you don't, learn what it is. Why didn't this trend break? Or, you know, why did I lose money on this trend breakout? Well, did you take it at the wrong time? Was there volume there? Or is it just one of those setups where it had a false breakout and you lost money? Why did you lose so much money? Maybe you didn't have proper risk management. Why is it affecting your mental so much? You need to understand this is only 30%. It only works out 30% of the time, you know? So you got to go through. You have to blame yourself, because you blaming anybody else for your own actions or for the decisions that you made is not going to make you get any better. That's why I say you're a loser unless you're learning. You're a loser if you're blaming too. Okay, so keep that in mind. You need to understand this. I'm going to read it one more time. Kristjan says, anytime you lose money on anything, it's your fault, no one else's. Okay? He says, I've gone through all the phases, 5 chat rooms, alerts, waste of time, put in the work, put in thousands of hours, and study the same setups that actually work. Just the players change, stocks change, and the themes change, but the setups stay the same. I have thousands of charts from the 80s and forward, and I even have charts from the 20s, 30s, and 60s, etc. It's this same pattern repeating. And that's why I recommend this book, the William O'Neill the stock market book, because the first 100 pages, guys, are all stock charts. From the first page I open up to 1958. Next setup, 1994. Next setup, let's just take a look. One more. 1998. These are all setups. It's all the same stuff. He uses cup and handles, which end up turning into trend breakouts. The handles are trend breakouts or base breakouts. It's all the same stuff. I'm getting excited now. Let me get a drink. Yeah, this stuff gets me excited. I'm a nerd when it comes to this charting stuff. And I really want you guys to get excited too. I want you to get excited because the more people we have looking at the same charts, calling out the same tickers, right? Looking at the same things, the better off we're going to be. We're going to be a hive, right? We have all one understanding. We all have one goal. That's to make money, to find these proper setups and proceed with proper process. If we all do that, we're all going to make money. Okay? So I can scour the market, but it's better if we're all scouring the market. We're all bringing forth the same ideas and we all can articulate on what the best trend setup is, whether it's fundamentally or technically or both. Then we can make money. Okay? We can make money by ourselves or we can come together, learn and understand all this, and we can bring it all together as a collective. We're going to be a lot better off. Okay, and that's the whole reason why I'm sharing my passion with you guys constantly and trying to put together an amazing team and people that are actually willing to learn and willing to work hard. Because it doesn't matter if you have $1,000 or $100 million. If we find the right strategies, we can still make money together. It's all about percentages, baby. Okay? So.
I have a question.
Yeah,
Dave.
please.
So earlier you mentioned barcoding.
Yeah.
What exactly is that? I mean, I sort of know, but I bet a lot of people know.
Sure.
But how different from legitimate sideways movement?
So barcoding is just like it sounds. Okay, so this is like barcoding. This isn't the worst barcoding, but this looks like barcoding. Okay, so it almost looks literally like a barcode, meaning if we look at this stock at any time, this thing ain't doing shit. You're going from $1 to $1.43. This ain't gonna make you millions. You know, it's just trading sideways. It's barcoding. You know, it's not doing anything. You know, this has got a little bit of movement, but it's not going anywhere. This right here, this is barcoding. You can't play this. There's nothing here. You know, what you want to see is a big move up, right? Like this, a pullback, and then instead of it coming right back down to where it was and starts to barcode, you want it to come down, hold a moving average, and start to trend sideways and then break back higher. This thing is not breaking any higher. Hell, it was barely breaking anything lower, and then it started to literally look like a barcode. So I don't want anybody looking at any stocks like this. You're not going to make any damn money doing this. Unless you're a range trader, you know, then you might have, you know, you might be able to, you know, short it here, buy it back here, and go ahead, you know, bleed your eyeballs staring at a chart all day. Be my guest. I'm not going to make money from this. I'm going to make money from, you know, Apple. You know, actually, Apple's not a good example because it's such a slow mover. I'm going to make money from First Solar, right? First Solar made a humongous move. Let me just zoom out here. First Solar made this humongous move right here. This is what caught our attention. Look at this. Huge volume right here. Humongous volume right here. Pushes up higher. Continues to push higher. And we were talking about First Solar. Should we buy? No, we're extended from the 10-day moving average. Look what happened. It pulled back. It created a trend. It breaks out of the trend. We buy the trend. That simple. Now we're making money. There's no barcode here. It moved up higher. It pulled, made new higher lows, made new lower highs, and then broke out. It's on to the next one. There's no barcode here. You know, this, you know, you might look at this and say, well, this looks like a barcode. Well, look, it traded sideways, created a base and broke out of it. Created a base and then broke out of it. So that's not barcoding. You know, this actually has some price action. This has a direction. It's moving up. You know, this is your stage 1, stage 2, stage 3, stage 4, stage 1. All right. So that's what I mean by barcoding. Does that explain it? Does that explain it pretty well? And just like I like to do. So what is barcoding in trading? So what is barcoding? Barcoding is a vital part of trading and e-commerce. They are used to track, manage, and identify items. Okay, no, that's not that's not what we want. But just so you guys know, it helps identify. Companies use it to help identify stock. No, that's So barcoding, we're going to have to just say it's my terminology because apparently Google is not hip with my terminology. Maybe we should start using Chat GPT, you know? Oh, that's funny stuff. So, all right. Does that help you out though, Dan Bob?
Sure does. Thank you.
I'm sure you already knew. I think you were just asking for the viewers, but I do appreciate you because you're the best moderator alive, baby. So thank you for that. So this doesn't contribute to us except for this excerpt right here. So the question is, will the SPY go up or down next year? He says, I think there's a correction. Will be larger in the SPY than the Qs, which he's talking about QQQ, which is the tech-heavy ETF. But in the end, I don't know. It's all mental masturbation. Who cares what I think? I don't know anything. Is it going to go up? Is it going to go down? Is the sun going to shine tomorrow? I don't effing know. If I knew these things, I would be the richest person in the world, but I'm not. A lot of times I use the crystal ball method. I say, I don't know, but this is what the price action is telling me. And even then, we don't know. That's why we have to use risk management, because if one person knew, why the hell would they talk to you? Because you don't know. They do, right? I don't know. All I can do is use what the market and the chart is giving me and base my risk analysis off of that, okay? It sounded like somebody left. They're like, oh, this guy doesn't know? I'm out of here. Do you believe you should create your own setups? Use brain power is for geniuses or those who think they're geniuses. You're better off just copying. You become successful by shamelessly copying the things that work. And this is a beautiful saying. People want to reinvent the wheel when it comes to trading. There's no reason to do that. There is timeless setups, in which, by the way, guys, you need to read the 3 Timeless Setups by Kristjan Kullamägi. I do my own evaluation on that in our YouTube. But yes, copying is the best way to do it and becoming the best at that strategy. You can there's so many strategies out there. Find the strategies that work for you, okay? I highly recommend ours. I really, really do. And all I did was rip it off Kristjan Kullamägi, Perdeep, William O'Neill, Dan Zanger, all the greatest profitable traders I have learned from. Why the hell wouldn't I use their setups? I know it works, right? Flag breakout is the type of setup that has been working best for me. That's where I made most of my money as a trading career. I've been trading for 8 years. The flags work on all time frames. Hear that, guys? The flag works on all time frames. You can trade them on the daily chart, which I do since I am a swing position trader. But if you are an intraday trader, meaning a day trader, you can trade intraday flags. It's all about defining your time frame. Since I have a longer time horizon, I really don't take intraday flags. I just don't care. I usually look at daily charts and also weekly charts. My main long setups is the things that are gapping up on earnings, good earnings, and that have been on an uptrend. And then I buy it opening range highs on the 1 minute, 5 minute, or 60-minute opening range break or opening range highs. So that's his 3 main watches. The only time he zooms in is when he's taking the trade, just like we do here. We find it on the daily or the hourly. I love looking at a nice tight hourly flag. And then we zoom in on the 1 or 5 minute, and then we take it on volume or the opening range break of that day. So it says, will you buy a breakout in a bad market? He goes, unless you are a day trader, there is no edge in a poor market for swing traders. We're going to leave it at that. We don't need to go any further than that. If we're in a bad market, if we're below a 21-day moving average, or as Kristjan says, below, or if the 10 or 21-day moving averages are curling down, we don't take the trades. We sit on our damn hands. We don't do shit. We wait for the market to turn around, okay? Be disciplined. What do you do in a slow market? How is your patience? He says the most important thing is to preserve mental capital. Stay positive and healthy, physically and mentally, okay? If we're in a bad market and there's no trades, like I said, we just look to see what the best opportunities are out there. We don't take them, but when the market starts to rally, then that's when you can take those stocks, as long as they have a setup. So I don't want to go too much into this. He also goes on to say, he used to play World of Warcraft. He would just do something else and then study, at the end of the day. Instead of staring at the market and being, in front of a slot machine, you remove yourself from that slot machine. And then when the days end, Then you look at the charts to see if things are shaping up, what's holding strong, all that good stuff. Let's see. And of course, patience. Patience is the hard part because you feel like you have to do something. Guys, I'm going to tell you right now, that's my biggest issue. I sit here in front of the screens all day. This is my job, right? I give a lot of money back because I feel like I need to be doing something. I have the urge to trade. Okay? And if I start to realize that, the more I get away, that's why jiu-jitsu is very key for me. Most of the times when I'm buying a setup, I'm done by 11. There's no more setting up. My alerts don't go off usually after 11. Sometimes they're going off as I'm walking out the door and I run back to the computer really quick to see, where the hell FSLR is at. But aside from that, I try to get the hell out of here. I turn off my phone. I don't turn off my phone. I put my phone in my gym bag. I go to jiu-jitsu. I come back, and then I get right back on the computer, because I've been gone for an hour and a half, 2 hours. But it gets me away from the lack of volatility because your most volatility is from 9:30 till 11:30, and then usually from 2 until 4, or between 1:30 and 4 is your last power hour, your push, okay? And he also goes on saying he's a chronic over trader and probably always will be, and that's fine as long as he realizes it and he doesn't go crazy with it. So I realize it and I do go crazy with it from time to time. I go from, really if I only messed with my swing trade setups, I would only have 6 trades in the past 2 weeks, but I've probably traded, 15 to 30 times. So, I'm over trading. I'm making money, but I could be making a hell of a lot more money. Okay. So that's one of my biggest flaws. True. I'm a chronic over trader, and Covey will tell you that too. He's my right-hand man. We've taken so much data together. Just so much crap we've been through already together in such a short period of time. He knows I'm a over trader. Let's see. Significant. So we went over that. We don't need to do that. Okay, so here's a good one. Do you hold losses? He says, I hate holding losing things. I even hate having red numbers in my portfolio. A quick small loss is the best loss. That is how I trade. I usually have lots and lots of small losses and a few very big wins. So I have a problem taking these small losses on things. Or he doesn't have a problem taking small losses. Because all he needs to do is catch 1 or 2 and he'll make it all back with much, much more size. Sometimes stock goes down. Most breakouts I buy fail. Okay? So you take small losses, guys. Know when you're wrong. We're not going to go over position sizing, and we're not going to go over the EP because EP is, in my personal opinion, is kind of like an advanced move. Okay, so we don't need to have you guys looking into EPs. So small account and big account, we kind of went over that. Small account, you take the fastest setups, but eventually you don't find the liquidity. You'll need more liquidity. And with more liquidity comes bigger, slower moving stocks. All right, so just remember, stay in the fast stocks. Is trading easy? I'll tell you right now, no, it's not easy. We don't need to go over that. Sell rules. He has the same sell rules as me. He does things a little bit different. So we're going to read this really quick. And then I promise we're going to just go over the market really quick and the economic data. So give me about 10 more minutes, guys, and we're going to wrap things up. So just pay attention. This is very, very important. You always trail. I don't buy into this sell into strength. Well, you should sell some into strength, but few times per year, or preferably more than a few times per year, you will catch a stock that makes a huge move, 100 to 500%. And if you sell your position after it goes up 30% and it goes up another 400%, I mean, you missed out on the opportunity there. It doesn't make sense to sell everything after 3 to 5 days. I think it's good to sell some and then keep the rest and trail it with some type of moving average. You're either going to sell too late or too early, but you know what I prefer? I would rather sell a little bit too late after the stock has gone up 100 to 200% rather than sell too early on a stock that is about to go up 200%. I would rather sell a little late than a lot too early. And that's what we do here. We sell after 2R, and we let the rest ride, baby. In a good market, 2R. If it's a choppy market or things aren't looking good, take it after 1R, but let the rest ride, baby. That's what we like to do using the 10 and 21-day moving average. Now, risk reward, we don't need to go over that. It's very, very important to understand risk reward. So if you don't know risk reward yet, don't even trade. You need to understand risk reward, okay? And I think that's what we're gonna stop it there, guys. It was pretty close to all of it. Again, it's in our Discord. You're more than welcome to read that whole section. If anything that I skipped over that you feel like you need to do. The interview was amazing. The guy did a great job, and it's just great that Kristjan is talking to the peasants, you know. But I've kind of already went over the S&P 500. We are above a rising 10 and 21-day moving average. We are still risk on. Things are looking really, really good. But, and I say but, because there's one big thing that's happening tomorrow. If we go to the economic calendar, you guys are going to find out right away that tomorrow is a huge flipping day. Core CPI, first thing this morning at 8:30 tomorrow morning. CPI year over year and CPI month over month also comes out. Consumer Price Index. That is very, very important to know what Consumer Price Index is. Now, I will come out with a YouTube short first thing at 8:30 so you guys get an update on what is to come of the CPI. So far, every report that I've came out with, I have given you the expectation and it has been correct, okay? Every time we come out with a hot CPI, that's usually a good thing for the market. Jobs report, it's good for the market because it shows contraction. But core CPI, if we just read it, the Consumer's Price Index measures the change in prices of good and service. So we want this to, if it's hot, that means it's coming out higher. We want it to come down, okay? And a lot of the times we've been trading mostly sideways, but the last three previous to the last one was a little higher than expected, but the market shook it off. It wasn't anything crazy. Now, if we get a CPI index and it's back up here at 0.8, that's going to be scary because we're forecasting, let's see, what is the forecast? Let me just double check. The forecast is 0.3%. So if we stay at these numbers, it's going to be very, very likely that the Fed is going to have better opportunities to cut those rates, okay? But here's the real thing that's happening. At 2 o'clock tomorrow, we have the FOMC statement, okay? The interest rate decision is coming out at 2 o'clock. So that's going to be the most volatile time of the day. 2 o'clock, guys. If you're in a position and you don't have a stop loss, it might be in your best interest. I mean, I use stop losses on everything. But what I'm saying is no matter what the decision is, currently right now, every forecast that was given since I've started has been set true. So they're expecting it to stay. And if we look at the CME, let's just take a look at it really quick. The CME, if you guys want to know what they're calculating, June, we only have a 1.9% chance of coming down 0.25%. Are we going to go up? No, we're not going to go up. They're not going to, by some crazy, turn of events, they might raise interest rates. But Powell has been very, very specific when he says no. He expects to hold the rates the same for as long as he needs to get inflation down. And he will not be overreacting or underreacting to any type of news when it comes to CPI or PPI or unemployment data. He is going to, what he says, stay the course, okay? And this goes all the way back to the previous Fed. I'm going to have a brain fart now. But he focuses on that. He's talked about reading his books and staying the course. You don't want inflation to get out of hand because the second it gets out of hand, it's harder and harder to bring it back down. His goal is to bring it down to that 2%. And as you guys can see, if we look at the inflation rate currently, we're at 3.4%. So the annual inflation rate is 3.4%, the same as the ending as it did last year. Okay, so we're going to get, in May, we're going to get June's report and to see where inflation's at. Currently, we had a small rise, okay? We ended last year at 4.1, and then we started to come down, and things were looking really good. We started to come back up a little bit in March. We started coming back down in April. Now this May, on June 12th, we're going to be looking at May's inflation on June 12th, and we're hoping that it will come down. And with the reports that we have coming out, like CPI, PPI, and all that stuff, we can see on the CME it will change. Now in July, we have a small percentage chance, 10.9%, that we're actually going to come down. But if you notice, we have nothing likelihood of going up. Now September, this is the cool part. September, we have a likelihood of coming down a quarter of a percentage point by 46% and a 5% chance of coming down a half a point. Okay? So keep that in mind, guys. So when it comes to this economic calendar and it's saying, the Fed rate decision, it's coming out at 2 o'clock. It'll drop at 2 o'clock, and I will be live tomorrow. So if you guys want to support your boy, I'm going to be live from 1 p.m. till around 4:30. So that way we have a full understanding. I'll be streaming live his full press conference. Okay, so I'll hit you with the interest rate decision right when it comes out, and then we'll go over the press conference after he's done talking. But my special guest, Papa Powell, he will be here with us live, and I hope you guys are here for it because it is a lot of fun. I know Dan, Bob, and I, we were nerding out. It was fun to watch, when he would say something that didn't sound too dovish. It sounded pretty bullish. All of a sudden, you'd see the stock market drop, and people are just on every whim on whatever he's saying. So it'll be fun. Tune in tomorrow, guys, for sure. But no matter...
I got a question.
Yeah, please, go ahead.
Are you going to be live on Discord or on YouTube?
I'll be live on YouTube. Very good question. I will post it in the Discord. If you're subscribed to my YouTube channel, if you hit the notification bell, it should pop up, but we'll always post in the Discord the YouTube link, so that way you guys have it. Okay?
All right, cool.
Thanks for asking, Will. I appreciate that. But yeah, so we'll be live. But regardless of the decision, guys, the real movement is going to come. You'll see a lot of movement at 2 o'clock, but at 2:30, when Papa Powell comes out, the second he turns on that microphone, I promise you there's going to be even more increased volatility right up until the end of the market, okay? No matter what happens, just like Chris Kullamägi says, the macros don't matter. The chart is what matters, okay? So keep that in mind. We're above a rising 21 and 10-day moving average. Even if we come back down during the FOMC meeting and we bounce off this 531, we're in good hands. Even if we come all the way down to the 21-day moving average and bounce off of 528, we're still in good hands. But whatever happens, make sure you're using risk management and keeping your capital clean. Okay? Now, guys, that's all I have for you today. I think it's very, very important that you study Kristjan Kullamägi. Danny is a huge advocate. Welcome, Danny. I'm surprised you're not sleeping, brother. This is not the time for you to be awake. I'm glad to have you in here, though, Danny. Danny's a huge advocate on Kristjan Kullamägi. He actually posted the trading school for Kristjan Kullamägi. You guys should watch that whole video. It's in our resource section. Make sure you guys take a little peeky gander at that. And, of course, go through all the videos that I posted so you guys know exactly how I traded. That is in the YouTube Swing Trading School. And yeah, that's all I got for you guys. Do you have any questions?
I have a quick comment, if you don't mind.
Go for it.
I was reading in O'Neill's book. He talks about the difference between fundamental picking stocks and price action or, charting. And he says, if you're going to do the fundamental, realize you're competing against institutions that have entire teams of researchers doing their research for them. So what an advantage they have over us. The one area that we're equal, though, is looking at technical. When we look at a chart, we're equal with the big boys.
Absolutely. And you can see where the institutions are getting in by watching the volume. And with volume and the technicals, you have price action. That's all it is, baby. And that's a really good point, Dan Bob. Thanks for bringing that up. Does anybody else have any comments, questions, or concerns? Danny? Anybody? All right. Well, I'm going to finish with this, guys. Thank you so much for joining me. I really appreciate you guys being here. I hope to see you guys during the live stream. We'll probably have a meeting that same night at 9. Dan Bob, what's on the agenda? The schedule say we're doing a meeting tomorrow night?
Yeah, tomorrow's Wednesday, yeah.
Okay, well, I'm a little slow today. So tomorrow we're going to have a meeting at 9. So we'll see you guys tonight at 9, but make sure you're there for the live stream. Thank you so much for joining.